Did you? Anyways, oh man, I better keep my eye on this. What is this? Kiwi. All right, let's get going on. Let's move this over here. All right. So it is Wednesday, August 24th, 2016. This is your daily Forex trading strategy session. We're waiting for Grandma Yellen to speak on Friday, but it's quite late in the day. I was actually invited to attend the event, the webinar live, so I'll be in the press gallery listening to Grandma Yellen live. Cool. That's cool. That's neat. But the whole market's waiting for that. But it's also summer. Yeah, it's just summer. It's just normal this time of year. Right? It's sort of like South African finance ministers going to jail. It's just normal. Just another day. What's the big deal? Just relax. Yeah. Good job, South Africa. There he is. Well, at least it's not like your president's under investigation for corruption. Oh, wait. Oh! So anyways, let's get going. Lots of opportunities to make some money. Euro's weak. Really? How surprising, huh? So without further ado, let's get on with it. Life is beautiful. Now you're living out your dream with your hopes up high. Your only limit is the sky. Hey. Life is great. Life is grand. Life is beautiful. You better give it all you got. You're gonna get what you give. Not a bad way to start the day. And then I follow that up by the scary stuff. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, by the way, who posted trade plans for today? Don't be a freeloader. The secret to success is collaboration with your peers so that you can grow. I did see that, Adam. Thank you, Adam. You need a profile picture, though, bro. Yeah, cool. I'm really glad to see you posting and in class every day and stuff. I was worried about you, buddy. Adam's a good analyst and good trader, guys. So to have him participate is a big deal. Yeah. How many years have you and I worked together? Yeah, just 10. That's it? I think my wife likes to tell people I dated her for 10 years before I proposed. So, Adam, will you trade Forex with me? So anyways, hey guys, I'm Wayne McDonell, Chief FX Market Strategist. Almost over my little summer cold. I guess that's what happens when you go to winter in the middle of summer. Maybe it was the zebra. Maybe I had bad zebra. Maybe the ostrich egg wasn't cooked all the way. I don't know. But anyways, yeah, my throat's mostly back, which is good, and I didn't wake up with like a sewer rat inside my throat or inside my lungs, which is pretty good. So thank you for your patience with me the last couple of days. But once again, you know, if anything, at least you know I never give up on you. Mama! But my speaking voice isn't quite back, but we're close. Hey, we do these sessions 7:30 in the morning every day. Why? Well, that's pre-New York Open, and it's also London lunch. It's a great time to realign the satellites, review strategies, set up strategies. Yeah. How many people feel that over the last year, these sessions, for example, at Forex.Today, have had a major, significantly positive influence on their trading? How many people could stand on the mountaintop and sing that this is the case? Both hands up. Whoop, whoop. Well, that's really good. Best morning radio I've ever had. How about you, Guy? Are you trading every day? Guy's another great trader. Almost very busy now. Yeah, that's the life of an exotic dancer, right? Your hours are odd, stuff like that. Jim, are you posting your analysis every day? Jim's got some good skills. Occasionally, okay. Kim says just started watching, but find your info amazingly true to what happened. Well, right, Kim. Yeah, it's funny how that's important, right? So like what I generally tell people when they find out I'm a currency trader and they find that exotic, I say, yeah, well, you have to know everything globally and then accurately predict the future every single day. But besides that, it's pretty straightforward, right? So like, oh my gosh, earthquake in Italy, sell the euro, sell the euro. It's funny how these things happen, huh? What was the earthquake, 6.8? Brian says, I am trading, but not successfully. Oh, 6.3, 6.2. Those are big earthquakes. Do you guys know your earthquakes? 6.3 is a pretty legitimate earthquake. Brian says he's not trading successfully. How long have you been trading, Brian? Patience, Grasshopper, patience. But thank you, Kim. I used to live in California, Zeal, for about 20 years. And the interesting thing is, really, there wasn't many earthquakes in that period. But when I first moved there, it was right after the big earthquake that happened in the San Francisco Bay Area in 1989, October 17th, 1989. I moved there like December 1989. And they were still having aftershocks. Little ones, right? And it was kind of interesting because you'd wake up in the middle of the night. You're like, why did I wake up? And you don't even realize your bed's doing this. Whoa, whoa, whoa. So you get up and you put your feet on the ground and you realize, oh, the bed's sliding and your feet are sliding. You're like, oh my God, it's an earthquake, right? And then it would stop, and you're like, oh, it's over. And then it would go, and that would be shaking, like vibrating. You're like, oh, so the first one would roll for a while, roll and roll, and then it would stop. And then the whole thing would shake like a ghost or like an evil spirit is taking over your home. And then it would stop, and then it would go, whoop, boom, 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 boom. And then roll. It's like really strange. Just a, and that'd be like, an earthquake. And then I lived on top of a skyscraper on the 25th floor. Let me tell you, everything is exaggerated when you're at the top of a skyscraper versus the ground floor. So even a small one, would sway, but the whole building is built on roller skates. So not a big deal. But anything over 6 is pretty legitimate, especially in an area that may not have a lot of earthquakes or building codes. Right? I don't know if Italy even has building codes or if they're just opportunities to bribe government officials, right? Which I think all building codes, no matter where you live, that's their main purpose, is for the government to collect money. Government officials to collect money, So, I don't know, that's pretty scary, and I think for Italy that'd be pretty scary. Yeah. Well, yeah, Dan, anything over 6 is big. Anything close to 7, because each, their magnitude's different. 7 is like the end of the world, right? So, like 7, like cars are bouncing off the ground. So someone was telling me there's 2 stories. What was the one in San Francisco, 7.1? Do you remember October 17th, 1989? It was like 7.0, not quite 7, maybe. Nobody remembers. Well, so Kenneth, we'll figure that. We'll get through it. But anyways, to describe it, one guy was saying he was driving down the El Camino Real, which is the major road in the Bay Area, and all of a sudden he could see in front of him the street lights were doing this. Right, like the lights on each side of the road would come in and almost touch. And he thought, well, that's odd. And then all of a sudden it was like he was on ice. So he saw the earthquake coming. And it hit him, and all of a sudden he was like on ice. And the road looked like a snake, right? And another person told me that he thought he tripped and he had fallen to the ground. And he's laying on the sidewalk, and then he realizes he can see the suspension on the car next to him that was parked, the parked car. He could see the suspension springs open up like this. And what was happening was the sidewalk was dropping so much, like 3 feet, that the car was kind of like, it was the opposite. It looked like the car was being thrown up into the air, and therefore the tires were hanging. Right? So just imagine a car being thrown up 3 feet. But it was really the ground falling 3 feet and then catching it and then throwing it up. Yeah, and he's laying on the ground like, oh my God. Hey, I think it's an earthquake. So yeah, so now think of Chile that gets like 8.0, which is unimaginable. But right? Yeah, Adam says the one in the Indian Ocean, Christmas, New Year's kind of thing, was over 9. And that's where that one is interesting, where just the entire continent basically dropped something like 6 feet. And that was that. I don't think it did anything else. Is that right, Paul? So imagine the displacement of, 500 miles of ocean dropping 6 feet. Amazing. So anyways, let's make some money. So speaking about making money, I'm really intrigued about how you decide to use Forex.Today, because it was built for you to improve your trading. I don't know if you fully appreciate it as you should, but I'm really interested in who's taking their trading and education seriously. I'm looking for the best. I'm wondering if that's you. There's some good stuff on here. And also, if you don't feel qualified as a trader to post your ideas, then I think you're doing yourself a disservice if you're not reading other people's posts and leaving likes and comments. Like, I just don't understand what's going through your brain. If you have this resource in front of you to make you a better trader, and by better trader, I mean wealthier individual, right? Literally, like, you could sit here and say, all right, what's Dan looking at? Oh, all right, so here's a point higher than a trend line up. He's looking for a Stokes cycle. This is all in the 4 hour. There's a weekly pivot in there. And he's got a high there, so he's looking for that. So in the smaller time frame, he does see it oversold, and he believes it's going to go up into this area and then come down and up. So so he's taking this 5-8 cross off that support. Okay, but then he thinks it'll come down one more cycle and up there. Okay, I see that. You know, and say, oh, you know, and ask a great question. Right? What kind of trigger are you waiting for on the 5 or 15 min chart? See, this will actually get sent to Dan. Okay? And also when you click this, it says, good job, Dan, I like the post. He actually gets an update. Thanks for liking this post. So you should actually go through this and read them and think about them and ask questions or leave comments. I mean, get involved. You know what I mean? It's not a TV show. This is not a reality show. It's reality, right? And going through a process like that will make you a better trader. Looking over the shoulder of dozens of other traders is an important aspect of improving and learning and growing. So get involved, participate, put the action in it, participation, right? You got to give it all you got. You're going to get what you give. We listen to that every day, right? It's over here. You gotta give it all you got. Gotta give. Right? So come on, man. Get involved. Change your life. Stop delaying your success. Remember, by just sitting and listening, you're delaying your own success. When are you going to take charge and change your world? And if you feel helpless that you can't change the world, let me tell you something. The way that you change the entire world is starting by changing your own world, and then you can positively influence the people around you. And over time, maybe you can influence other people or put the people around you in a better situation so that they can influence other people, make their lives better. I tell my son every night before he goes to bed that the secret to life is finding one thing every day to make somebody else feel good and feel better. So like another way of turning that around is you could say, what are you going to do? One small thing to do today that will make you a better trader. One of them could be posting a trade plan and actually thinking about it. Here's the thing, guys. Patience and discipline, right? Excuse me. Taking the time to think out a trade plan on multiple time frames and then documenting it. That takes talent, but it takes time. It takes effort. It takes patience. It takes discipline. It takes focus. And if you develop those skills, you'll probably end up being a better trader than you are now. So just the act of doing it should have a positive influence on your trading. And reading other people's posts and leaving comments or asking them questions is another opportunity to grow. And it would be much appreciated by the people that are taking the 20 minutes to post a trade plan. You see? All right. So here we are, Euro Yen. We were recently just up at the top of this range. Life is great. Life is grand. Life is good. Yeah, what do I think about the equities? I love the equities. See, it's money. We're money traders, right? So the stock market is money. The bond market is money. The commodity market is money. All of this, and then sort of business cycles and business conditions are money. Right? So if the world was in a healthy economic situation where trade was active, we would have more money crossing borders for just normal things like business. Right? Americans, for example, could buy more cars from Germany and more cars from Japan and more cars from Korea. Half the cars in Georgia are Korean but made in Georgia. Did you know Porsche, their U.S. headquarters are in Georgia? Did you know Kia? Their headquarters in Georgia? Amazing, right? So anyways, the more we have, the more we have money changing hands across borders, right? The better things are. So, Tino asks a great question. Will the Fed, will the S&P 500 go down as rates increase? Yes and no. Okay. Yes and no. So you may have heard that when the Fed raises interest rates, the stock market falls. That's not 100% true, and it's not 100% wrong. But let me try to simplify it, and then you can try to observe what happens so that when it does happen, you can say, oh, I see what's happening, and you write that down. And then 5 years later, when it happens again, you'll say, oh, I remember what happened in 2016, 2017. Okay? So here we go. I think the stock market will go up until the Fed is done raising interest rates. Okay? So when is that? Well, that's a long ways to go. Another way to measure that, and I think it may be a difficult thing this time around, because this time is always different than last time, and then it never is. That's the funny thing about history, is it's always different this time, and then as time goes by, you find out it really wasn't. But typically, I don't sell the stock market until I see an inverted yield curve. Okay. Let's see. I guess we'll just do this. This is ugly anyway. So an inverted yield curve. Life is great. Life is grand. Life is good. Where's my drawing tool? Oh, way over there. Hang on. Un momento, por favor. All right. So an inverted yield curve. I guess we need to start by what a yield curve should look like. Okay, we'll call this percentage, and we'll call this time. Okay. Okay, if you want to borrow money overnight, just overnight, should you pay a high interest rate or a low interest rate? You're going to borrow money today and pay it back tomorrow. Why low? Because the risk that you lose the money is pretty low, right? Especially if you're General Electric. Okay? So it'll be down here. If you are, if you borrow money for a year, should you pay more money or less money than one day? More. Okay. Now, to reverse it, what if you're the one lending money? You're a lender now. If you lend money to somebody for 5 years, should you make more or less than 1 year? If you lent somebody, you should make more. You should earn the percentage, right? Why? There's a higher risk. A lot can happen in 5 years. What if the economy collapses? Or what if you lend someone for money for 5 years and you charge them 3%, but interest rates go up over the 5 years? You could have lent somebody else money at a higher rate, so you're kind of losing a little bit, right? So there's repayment risk, right? But then there's like rate risk that you could have invested somewhere else and got a better return. Okay. All right. So then over 10 years, you should make more. Okay. And what about someone that lends out money for 30 years? To compensate them for all these risks, especially the risk of time, they should be compensated the highest, right? Or if you're going to borrow for 30 years, you got to compensate them for them risking money, right? So we call this a yield curve. Okay? So this is, let's say, from 1 month, right, to 1 year, to 5 years, to 10 years, to 30 years, for example, right? All right. So we have a really strange yield curve right now because the Fed is in the market setting these interest rates. They're manipulating the market more than normal, right? All right. So I did, by the way, call the top of the stock market last year. Last time, whenever it was, 2007. We were actually talking about it probably 2006. Right? It's amazing, but it's absolutely true. And even though you'll probably have heard that it was not predictable, nobody saw it coming. It's so pathetically easy to predict. It's a crime that these experts claim that it was unpredictable. Okay? And so, anyways, right before the stock market crash and right before the real estate crash, we got out of the market, sold our house, and moved to the other side of the United States where the effects of the aftermath would be the least. So I put everything on the line, not just predicted the stock market was going to fall and the real estate market was going to fall, but put everything on the line as well. At a time when my wife was pregnant with our second child and our first child was a toddler. So we moved 3,000 miles away from our family and friends because of the imminent stock market and real estate market crash. that apparently was unpredictable. Except if you knew me at the time, we talked about it for 6 months, and then one day I came in and I said, "That's it. I'm out. I'm going to cash out of everything, and I'm going to put everything on the line, take my own advice, and move on." But that's what a trader does, right? So here's what I did. You ready to be blown away? Oh man, I didn't mean to click that button. So let's go back to the percentage, time, yield curve. Should look like this, right? Okay, before the stock market crash, in fact, like 6 months, 6 months before the crash, it looked like this. Percentage, time. You ready? It looked like this. What? Now, is that difficult to spot? If it's supposed to look like the one on the left, and suddenly the one on the right has occurred, do they look similar? Not negative, inverse. Okay? So, to borrow money for, let's say you're General Electric, you're at the time the biggest company in the world, very stable, profitable company with huge cash flows. They had to pay like 6% to borrow money for 30 days. But if someone lent money out for 30 years, they only got 5%. What? Does that make sense to you? No, it's not that it's low. It's that you can't make any money. What is your profit margin if you're a shoe salesperson that has to pay for rent, inventory, advertising, salaries, right? Etc., etc., etc. See, what happened was the profit margin used to be 5%, but when the market's functioning and you're only paying 1%, it's not a problem, right? And then 2%, not a problem. 3%, not a problem. You're still selling shoes, right? 4%. All right, well, your profit margins are low, but you're selling a lot of shoes. Well, what happens is you get to this point when the short-term borrowing costs are so high, you're selling shoes, but you're losing money. Okay? Now, it takes the stock market a little while to figure this out, because after doing a couple of quarters of reporting, right, earnings season, they say, hey, same store sales are up, but profit margins are down. And all of a sudden, you remember the stock market is trying to price in future expectations of profit, future profits. They're trying to figure out how much money you're going to make in the future. And if you're going to make a lot of money in the future, you're going to attract investment. Well, all of a sudden, you get to the point where you're selling stuff, but there's no profit in it. Because the cost of your borrowing money to pay for inventory is too high. And it goes all across the entire industry, right? Everything starts to cost too much money. And therefore, profits come down. And then what happens after 2 or 3 quarters of not making profit. What happens to the stock market? The shoe pavilion. Third quarter in a row of not making money. The stock market falls. Okay. But how do we get from 1 to 6? Who's adjusting the interest rates? See, the Fed doesn't really influence this as much as they would like, but they can influence this very easily. They raise the Fed funds rate. Fed funds rate raises the prime rate. The prime rate raises the borrowing rate or whatever, right? Like mortgages, for example. And so what traditionally happens is the Fed then very quickly lowers interest rates. Or people get out of the stock market, and what do they do? What do they do with their money traditionally? Buy bonds. Bond prices, do they go up or down? Okay, bond prices go up. So what happens to interest rates? Interest rates fall. There's an inverse relationship between bond prices and bond yields. So if people get out of the stock market, like the S&P 500, and they buy the bonds, like 10-year T-note, then bond prices go up and interest rates fall, and this yield curve would normalize. And, you know, this will adjust a little bit, but those are long-term investments or loans that have already kind of priced in this type of risk or volatility, and they're not going to adjust that much because they're 30-year investments. The stock market is definitely likely to go up or down over the course of time. Hey, Turkey launched a major attack in Syria today. Isn't it just amazing that last week Vladimir Putin was in Turkey? That's strange. What a coincidence. So anyway, this yield curve would likely normalize, right? So it's just the idea that when short-term interest rates are higher than long-term yields, you have to pay more for a 30-day loan than you do for a 30-year loan. Something is just not right in the market. Do you understand? Something is just wrong, and the bubble's about to burst. And so you had, I think, pretty close to 9 months to get out of the stock market and buy bonds. Now, isn't it sad that most people on the planet Earth had to lose half of their net worth in something that was unpredictable, but we can casually talk about it in the course of 5 or 6 minutes? That there was no experts in the world that saw this coming? Really? It's really strange. Yeah, crisis, right? Crisis tends to make gold look attractive, but, you know, falling interest rates makes gold attractive. Because rising interest rates makes gold look unattractive. So it's just the opposite, okay? All right, so Michael asked a great question. What caused interest rates to be 6% in the first place? A little thing we called inflation. Everybody was filthy, stinking rich. Yep. So, for example, everybody in California is poor. They make $500,000 a year, but they live in a $3 million house. which means all their money goes to their house. And by the way, their house sucks. But anyways, I remember at one time one of my neighbors, I don't think he even did anything. I don't know what his job was. But he wasn't smart. He didn't do anything interesting. He was, by every stretch of the imagination, excuse me, an average Joe, a six-pack Joe. Just absolutely average by every standard, perhaps even below average on some standards, which below average for, in many cases, is average. So this guy would drive around in his brand new Cadillac Escalade, and it was just, if I was a rapper, I would have written a rap song about it. But that was the normal thing right at that time, that below average people were living above average lives. Well, how the hell did that happen? Also, because they were just taking equity out of their house. Remember, people weren't even paying interest on their loans. I mean, just really strange, right? Poor people living rich lives. Well, that's a form of socialism in a way. And socialism, if you don't know, sucks. Oops, I'm a little opinionated. Hope you don't mind. I'm also reading Milton Friedman, so, you know. So anyways, you had the other key aspect. Remember, I said one day I came in and I told everybody, this is when I was running FX Boot Camp. I said, all right, it's happened. I'm out. I'm leaving. I'm going to cash out everything, and I'm going to sell everything I have, and I'm going to move. And that was, I was watching the news one day, and it was, we got like existing home sales came out. Turned out that literally every house that was sold at that existing home sales report was sold to someone that already owned a home, which is a very strange thing. And that's back, when, strippers owned 5 condos, in Vegas, that kind of thing. Everyone was a real estate mogul. And once again, when every idiot is a real estate mogul, that's the end of the real estate boom. You know the saying, when the shoeshine boy gives you stock advice, right? Get out of the stock market. So anyways, that's the world we lived in, and that's why it all crashed. And it's not crazy or magic and all that kind of stuff. It's pretty easy. All right, fine. All right, so a couple of days ago, I drew this, or was it yesterday? It might have been yesterday. Do you guys remember drawing this on the pound? I made this mistake here, and I used the parallel instead of the thing, but... So here's the craziness of the world. We were looking at higher highs and higher lows, right? Higher high, higher low, higher high. And you see what I predicted yesterday? Pretty crazy, right? Higher low, higher high. Hey, we were right. That's cool. Oh, you guys like this rainbow thing? Yeah, to me it's the same thing, so I hope you don't get caught up on it. It's the same thing as everything else. I'm just, if it makes it easier for you to see these changes, but that's how I look at all of this stuff, right? What's the 2155 doing? What's the 58 doing? Where's it going? Right? To me, it's all the same. But yeah, I found it somewhere. Let me show you. It's called E-Rainbow. Yeah, it's just pretty. Don't get caught up into it, right? But like, if you can't see it's a downtrend during this area, you got some serious problems, right? And if you can't see it's an uptrend now, you got serious problems. But, you know, is it any different than this? I'm just, you know, when I drew this, I was trying to show you, you know, the idea of, right? That you should be able to predict these things. So this is, again, something we did yesterday. What is this? Oh, yeah, the S&P 500. So, yeah, we predicted this on Thursday, and then we ended Friday. And then yesterday, you know, I drew this to indicate that it's going to go up higher, which it has. It's not complicated, right? Do you guys remember this? What is this area here that started this whole move? Oh, Kathy was on TV just above. Is that right? That's not Kathy. What are you talking about? You're so funny. That's not Kathy. You're so funny. So anyways, yeah. Do you remember what this was? Remember, don't make it complicated. Yeah, support. Yeah, wink, wink, nudge, nudge. Daily 21. Thank you, Artem. So that's support, right? Yeah. And so what have I taught you to do when price returns to the 21? In this case, it's bullish. So what have I taught you to do 100 bajillion trillion times? You buy it. So we're done. That's it. Somebody bought it at the 21. What's the big deal? Where's the complication, right? Where are we overcomplicating things? So then the next part of it is, if it can, you know, if it does go up, what will that look like on a smaller time frame? How about higher highs and higher lows? So you could get totally messed up here, like, but wait, it just fell, just blah 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 blah, just blah blah blah. No, the most important thing is we're at daily support. On a moving average that has only one purpose in the world, is to act as support. So therefore, it will go up. That's it. It just will go up. It will go up. Why? It's supposed to go up. It's the 21. That it goes up. That's a place for buyers to buy. It will go up. 100% chance of it going up, unless it falls. But it's your mindset. It's not like, oh, but this or oh, but that. No, there's a 100% chance it's going to go up, unless it falls. If it falls, take the loss. But in your mind, 100% chance of it going up. Great. So it goes up. And then what happens? If this is an uptrend, what happens next? High or low? Okay. All right, so now you're a bull going in on Monday, right? Just based on weekly pivot points. If you can have a perfect textbook trade based on weekly pivot points when you're a bull, what is the setup? You are praying all weekend for something to occur on Monday morning. What is it? No, we're not doing price action anymore. Pivot points. M2 to M4. You guys get it? You're actually all Saturday and all Sunday, you're praying to the market gods, please get me in at weekly M2. Please get me in a weekly M2. Okay. Okay. You see? Thursday, Friday, Monday, Tuesday, whatever, and there's the target. Assuming it's a perfect textbook world, right? Like you can't get any more basic than that, can you? So this is the area in which you want to buy, somewhere between the weekly central and weekly M2. Well, Tino needs to start Googling. But that's the stock market. As you know, the stock market is completely unpredictable. That always makes me laugh. Don't make me laugh. Don't make me laugh. So right now we do have a challenge. And the challenge, of course, is this, right? But even that's pretty predictable, isn't it? If we can't get above that, and the stock market does come down, guess what? We're going to bottom out here. It's not only because it's last week's support level, but it's also this week's support level, one based on price action, the other one based on pivots. That would be an inside week from weekly R1 to weekly S1. Okay? But, right? R1 to S1. Also, if you're trending, you have 1 week that's up, maybe 1 week that's sideways, and the next one that's up. What do you do in a situation where you're up, down, up? Okay? You see all of a sudden no higher high, no lower low? Right? So this would be the inside week. This whole area, you can count it, right? No lower low, no higher high. Right? So you didn't go higher than here, and you didn't go lower than here, for example. So if we don't make a higher high, and if we don't make a lower low, then we'd have an inside week. Okay? Also, R1 resistance to support. Okay? No real trend in play. Okay? So it comes down to, whether you're a bull or a bear. Okay? Also, what do the monthlies tell you? Life is great, life is grand, life is good. Hopefully we can get to MR1. Especially if it's going to fall, let's at least get it up there and then have it fall. Tino asks if I trade the Dow and the S&P 500. Not anymore. When I first got into commodities, I was pretty excited. I did a lot of training and a lot of studying and just fell in love with it, actually. And started trading it because I'm like, oh my God, everything that I do in Forex seems to work in these other markets. How awesome. And then I got my tax bill. And taxes are due in April. I think I filed in November because it took that long to do them. Seriously, can you guys imagine? So my tax bill just to pay someone to do the taxes was many, many, many thousands of dollars just to pay the guy. And then I got my tax bill, and we had to estimate the taxes and stuff. So I paid the taxes, and I'm conservative, so, I didn't try to skimp anywhere or cheat or anything like that. I love paying taxes. It means I'm rich. So, we made our best calculations based on the complexity of my tax returns. And it looked like a phone book. It was no joke, like it was hundreds of pages long. And so I filed them. And, after all of this time and effort, I got 2 letters. One of them was a tax return from the government, which is interesting because, I'm an entrepreneur. I don't get tax returns. Like poor people go, oh, I got $300 back from my taxes. I'm rich. Let's go spend it. Let's go to Target. I'm just not that type of person. Just never have been. But most people get all giddy for stuff like that. Great. So I get this. I'm like, it's a tax return. What the heck is this? Right? Oh, bourgeoisie. So I get it, and it's over 6 figures. Six figures. I got a 6-figure tax return. That's 5 zeros behind a number. I overpaid my taxes. They gave it back. I could buy a Ferrari with my federal tax refund. I overpaid by a Ferrari. That's funny, right? And it's because the taxes were too complicated. And then you know what the other letter was? From the state of California. They didn't have enough money to pay me. I am not joking. I got an IOU from the state of California because I overpaid those taxes and they didn't have enough money to pay me. No joke. Really, honestly happened. So I had to wait like another 6 months. And that was enough money to buy, not a Ferrari, Porsche Boxster maybe? I don't know, a cheap Porsche? So isn't that funny? And it was just because the taxes were too complicated. So I stopped trading, all these other markets and trade just Forex because they have the best treatment and all that kind of stuff. And so I can trade based on correlation. For example, risk on, risk off. Well, all right. So look at the S&P 500. Are you ready? Let me blow your mind. Are you ready? Look at it. Let's look at recently, okay? So this is a 1 hour. What do you want to look at? Maybe, yeah, let's do it this way. Okay, a 4 hour backed out to the beginning of the month. Okay? So since the beginning of the month, the S&P 500 has been up, right? Up, 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 down, down, up, 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 down, down, up, 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 up. Okay? More ups than downs, right? You want to see something? It's funny, something changed. Like all the currencies are in different spots now. Like Euro USD's down here now. I wanted to do like pound yen. Yen. Oh, it's highlighted. Duh. Okay, ready? Look at the S&P 500. Now watch this. Boom. Zoom it. Okay. Remember, we started the month down and then up, 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 up. Not perfect correlation, but good enough for the girls I go with. Right? So risk on would be pound yen long, for example. Okay. So another example is yesterday we predicted the stock market would go up, even though it wasn't going up yesterday. We predicted it would go up today. See, remember yesterday I said what you're supposed to be doing is planning tomorrow's trades. How many people remember that? Yeah, Artem? So let me say it again. What you're supposed to be doing today is planning tomorrow's trades. If you open up your charts and you're trying to figure out what to do today, you've already lost money. So you might as well take the money you've thrown away, or will throw away, because you're going to lose it. Well, why do you care so much about it? Why don't you take that money out of your checking account and put it into a savings account? Instead of giving it to the market, why don't you just put it in an account so you can go ahead and slowly lose money out of your spending cash, and in 3 years from now you'll have a pile of cash to trade when you have good skills. You see what I mean? So yesterday we said the stock market was going to go up. Was the stock market going up yesterday? No. So what were we doing yesterday? Planning that because price had kicked off Thursday's daily support, that this week should continue to go up. So how do you trade something like that? If you can't trade this S&P 500, why did we even look at it? Well, there's a risk-on scenario that you can consider. So how about something like Kiwi yen? Oh, wait. I'm long, I have my stop at break even, and I'm making money. On yesterday's analysis, that's weird. It kind of looks like we had a move, a retracement, and somebody bought it right here. How crazy is that? What a wild and crazy guy. Do you love the facetiousness, or is it annoying? It's probably annoying. I'm just trying to tell you, like, this is the stuff we talk about, and the stuff that you're supposed to be practicing, right? No, there's nothing. No, it's not brilliant. It's not nice. It's not good. This is boring. Simpleton. So the thing is, this is what you're supposed to be planning in advance on Forex.Today. Take 20 minutes and think about what you're going to do tomorrow or later today. See, you might not be posting your trade plans because you don't have any trade plans. Well, wouldn't that possibly be what's holding you back from your destiny? Are you destined to be great? And if so, when are you going to start acting great? Right? Your greatness is to analyze the market first and then develop a strategy in which you will most likely make money. Isn't that interesting? Well, it would have been one of these. Okay. So, anyways, start planning what you want to look at later today or tomorrow. Okay. Start with a hypothesis. So that's what a trade plan is. If price hits that daily 21, what do you think will happen? And of course, I'm not looking at a daily 21, anything. USD CAD then. All right, USD CAD if you want. If the daily 21 holds, then what will happen? That's a plan. And what if that doesn't happen? You probably won't execute the trade. So what's the big deal? But it always starts with a hypothesis. So you can say on Forex.Today, hey, hey team, I just noticed the USD CAD is somewhere near the, oh, come on, drawing tool. There we go. Somewhere between, near the 2155, the daily chart. So my trade plan is maybe something like this. That is plausible. Okay, great. So you can take a screenshot if you want. And then you go into like the 4 hour. 4 hours seems like it's still trying to head up. Okay, but likely some divergence. Okay, or you say if it's not going to make a higher high, then this week what it'll do is it'll double top at the R1 and then drop. Right? So possible opportunities to sell would be kicking it off WR1 and or wait for the lower low and kick it off the weekly on the way down. Okay? So that's the hourly or 4 hour. Okay? So that would put you up to the weekly R1, and then what? Maybe a 5A cross down here, or 5A cross down on a 15-minute chart off of the weekly R1 because you believe it's going to kick off of tomorrow's 21. So that's a trade plan, right? So you're like, all right, if price comes up, hits here, we know it's a double top. Okay? And we're assuming tomorrow's daily 21 is going to be in this neighborhood here. Hasn't happened yet, but it might be tomorrow. So therefore, if price comes up and then we see a 15-minute 5/8 cross down, your trade plan will be sell here. And because you're kicking off the daily 21, if it does indeed fall, it's probably worth, I don't know, minimum 300 pips. You'd be embarrassed to get less than that. Okay. Tino says use a fib and all that. So all that kind of stuff, right? And then what if you're wrong? It'll do this. And then the whole world will laugh at you and throw rotten tomatoes at your face and snicker at you. And young children will make little hand puppets with your face on them, with little googly eyes. Ha ha ha, he got the trade plan wrong. I mean, like, who cares? Well, most likely you don't even get the trade, though, Tino. Because what will happen is it won't roll over on the 15-minute. It won't roll over on the hour. It'll just go up. And you wasted your whole day staring at this resistance zone that didn't hold. So do you understand? I also recommend that you don't sell it when it hits here. that you wait on a smaller time frame for something like this, and that the better place to sell is here, not here, because you could sell it and it just goes up. So why not wait for it to get, let's say, let me change the color of this highlighter. Hang on. Let's go back to red. How about magenta? All right. So you wait for it to see this area here. So I'm looking now for the low lower than that so I can sell it here. Okay? And the major difference will be like on a 300 pip trade, 20 pips different. So it wouldn't even matter, right? Otherwise, yes. Otherwise known as a second chance. Or a 1, 2, 3, or whatever you want to call it, right? But the thing is that you're thinking about where tomorrow's resistance is going to be today. So if this is the daily 21, okay, if we're assuming this area here is the daily 21, isn't that our resistance? Somewhere in here? We don't really know. So there are two places then to trade this if you want to trade that. It's either going to be at the weekly R1. Now I also say every day, if you're a bear, identify two areas of resistance that you may wish to sell. Well, we also know on a daily chart, very often you see price like, if this is the daily, if this is the daily 21, very often you can see price on a smaller time frame, pierce through it, and then drop back, right? Sure, it doesn't change a thing. It's just a wick on a daily. So this could also go all the way up to here, and then fall and still look good on the daily. So my trade plan would be to set up a double top reversal type scenario, or to sell it off of this zone. Basically on bullish profit taking. Okay? And because this is our bottom, it'll be WR2. So if you're a bull, this is going to go up and not quite hit 31. Now, because of the big psych level, maybe 30 is going to be the number. But according to pivot points, it's telling me R2. So if I don't sell it at R1, then I'll back off and try again at R2. Pretty simple. Either way, if we get the weekly 21 correct, then this will fall significantly farther. Okay? Now, that could be completely wrong. The process of thinking about it is what will make you a better trader eventually. And nobody's going to laugh at you, and children are not going to make little sock puppets with googly eyes to mock you. Right? So then why do you delay your destiny? Isn't that like the worst thing? To have the potential inside you to be great, but you don't want to take the chance because you might, I don't know, look bad or something? I don't know why you wouldn't. So anyways, you should get involved. Post your trade plan. Get yourself great as soon as, right? As soon as possible. Don't you remember that famous movie where they said, when you realize you want to be a successful Forex trader for the rest of your life, you want the rest of your life to start as soon as possible? I did Kiwi already. So, get involved, man. Your destiny awaits. I think it was called When Harry Met Wayne. Hey, new to the industry, huh? Good for you. There's room in here for you. Stop being late. That was my first piece of advice, even though you didn't ask for it. Yeah. Well, it's 8:49, and I'm supposed to pull the plug here. So if you are brand new, then ask me tomorrow, and don't be late. And ask at the beginning of the session, not at the end, and I'll be happy to help. Is that fair? Yeah? Then I want to ask you for something, if you don't mind. Okay? I want you to go to TradersWay.com and open a demo account. Takes maybe 1 minute. So if you spend 1 minute doing that today, TradersWay.com, if you spend, and I'm not joking, I think it'll take 1 minute, and then you'll have to download MT4 and stuff if you want to do that. And I'll spend probably 30 minutes tomorrow giving you a basic overview. Is that a fair exchange? You invest 1 minute of your time for 30 minutes of my time? That's fair? I don't wish to be rude or anything. Yeah? Yeah. So I will do that tomorrow if you will do that today. Yeah. See, we're a team and we're family here. So I'm going to treat you with respect. Cool. So peace on earth. May the pips be with you. May your profits be above average. And have a wonderful trading day. And I look forward to reading your plans on Forex.Today. I hope you really do take the time to get involved and improve so that you can enjoy your destiny of success. Stop delaying your destiny. Cheers.